my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your weekly technical analysis of Kansas City and Minneapolis wheat markets. I'll start with Kansas City. There have been some obvious differences here in the past to the Chicago contract that I have been at pains to point out. More recently, there have been some more subtle differences. Let's start with the recent low of the market 2 weeks ago. Unlike Chicago, the indecisive doji cross that was made 2 Fridays ago did not penetrate the now flatlining medium moving average, currently at 671. Indeed, the medium moving average very forcibly halted the decline and turned the market back up. Additionally, though the short medium moving average, currently at 700, was penetrated, there was still no single close below it, thus verifying that as a support as well. Next, whilst I could draw a new bullish Andrews pitchfork for the early July to early September action, much as in the Chicago wheat contract, the question I pose is, why should I? You see, the original late March to early July pitchfork may have seen a lower time, as I say, currently at 700, breached, as had the middle time, currently at 680, of the late March, early July shallow bullish shift pitchfork. But there were no closes below either, unlike Chicago, thus also supporting both their integrities. Additionally, the lower time and the rising short medium moving average seem to have partnered up over the last 3 weeks, also adding further support, one would suppose. Now, to temper this rise, the rise over the past week has been less pronounced, with today, that is Friday's action, not exceeding the highs over the previous 2 weeks. Yet in that restraint is a possible further future pattern formed since the ending of August. It is a possible small reverse head and shoulders pattern with the neckline at about 730. Now, I have labeled the area on the daily chart with the neckline at about the 730 area. But no more than that. At this time, it is a little too early to start making targets on the top side for the reverse head and shoulders pattern, but perhaps not too early to start talking about them. An initial target on the top side would be in the 773 area, whilst the secondary target would be in the 790 area. Both are ambitious, as they would exceed the recent highs and should thus be treated with caution until verified. Finally, one further item I would like to discuss. I have over the past few weeks spoken about the possibility of a very large double top formed since March. I asked you to watch this space. Well, these current bullish patterns seems likely to negate and retire that idea, though I will leave it open for perhaps one more week. Minneapolis wheat. I continue to admire this contract, really admire this contract, and with some unabated passion, as it has been and still is a series of brilliant pieces of technical action. Now, I've repeated this same mantra now for months, yet there have been and are a number of, let's be honest, huge differences here in this contract compared to Chicago and the Kansas City contracts. For starters, and perhaps supremely important, is the August to December 2020 bullish Andrews pitchfork, which has run this market higher so successfully. It was and is still valid, but you have to allow for some aberrations. The key feature of the summer has been how the market has punched up, down and over and under the fantastic upper time, currently at 980 of this pitchfork. Now, during that time, prices moved higher, and when it looked like they might fail, well, those very same actions also allowed me to draw a more acute April to May bullish Andrews pitchfork. Now, this second one had grown like a branch out of the first one. 5 weeks ago, we found the lower time of this new Andrews pitchfork crossed up over the upper time of the old Andrews, and there's the rub. Because of this conflict, it stopped the market's rise, in this case for a second time, and prices pitched lower until finding support once again at a combination of the rising short medium moving average, currently at 896, the 2017 high 868, and perhaps most importantly the middle time of this older bullish Andrews pitchfork, currently at 897. Thus, the newer, bullish and more acute Andrews pitchfork is no longer viable. Now, I was going to retire it, but it does show off so well the conflict of the two bullish pitchforks and which one eventually overcame the other. It also shows off quite well how the short medium moving average is now a parallel reinforcement to the middle time, something it has done since late August. Now, one could say the action since July has perhaps been an extended sideways action, even an extended topping action. I can see the point of those. I would not dismiss this fearsome looking bullish Andrews pitchfork out of hand. It is obviously still affecting the market, and until it stops, it will be the primary indicator of the bullish incentive, still evident in this market. So I'd like to still have to look at a test of the rising lower time. Really, you'd have to look at a test of the rising lower time, currently at 8.23, to even suggest negating not only this quite long-lived August to December 2020 bullish Andrews pitchfork, but a whole bullish incentive here. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.